Good day and welcome to ZF Commercial Vehicle Control System India Limited Q1FY25 post-results earnings conference call hosted by Batliwala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need an assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Annamalai Jayaraj from Batliwala and Karani Securities India Private Limited. Thank you and over to you, sir.
Thanks, sir. Good afternoon. Thank you for joining us today and welcome to ZF Commercial Vehicle Control Systems India Limited call to brief you on their quarterly earnings. Today, the first quarter earnings for FY 2024-25 will be presented by the management team of ZF Commercial Vehicle Control Systems India Limited. Your host today from ZF Commercial Vehicle Control Systems India Limited are Mr. P. Kaniyappan, Managing Director, Ms. Shweta Agarwal, Chief Financial Officer, and M. Muthulakshmi, Company Secretary. I will now hand over the call to Mr. P. Kaniyappan, who will provide further insights into the results. Over to you, sir.
Thank you, Mr. Jayaraj. Good afternoon to all of you. I warmly welcome you all to ZF Commercial Vehicle Control Systems India Limited first quarter results for FY 2024-25. Certain forward-looking statements that we will make today are based on management's good faith expectations and beliefs concerning future developments. As you know, actual results may differ materially from these expectations as a result of many factors. ZF Commercial Vehicle Control Systems India Limited results for the quarter ending June 30, 2024 was published on July 22, 2024. They are available on the website www.zf.com under the ZF CV India Investor Relations section. We hope that you have had an opportunity to go through them. A transcript and a recorded audio of this call will also be made available on the website www.zf.com under the ZF CV India Investor Relations section. I'm happy to talk to you today as we give you an update about the business of the company. First, economic update. I would like to start with a quick update on our operating environment, which is influenced by economic factors and the development of the commercial vehicle industry. The high-frequency indicators of domestic activity are showing resilience in 2025. The southwest monsoon is expected to be above normal, which augurs well for agriculture and rural demands. Coupled with the sustained momentum in the manufacturing and services activity, this should enable a revival in private consumption. Investment activity is likely to remain on track with the high capacity utilization, healthy balance sheets of banks and corporates, government's continued thrust on infrastructure spending, and optimism in business sentiments. Improving world trade prospects could support external demand. Headwinds from geopolitical tension, volatility in international commodity prices, and geo-economic fragmentation, however, pose risk to the outlook. Taking all these factors into consideration, real GDP growth for 2024-25 is projected at 7.2%, with Q1 at 7.3%, Q2 at 7.2%, Q3 at 7.3%, and Q4 7.2%. The risks are evenly balanced. Source: RBI's Monetary Policy Committee report. Indian commercial vehicle industry. The commercial vehicle industry, specifically in the CV above 6 ton segment, grew at 6.5% during financial year 2023-24. However, Q1 2024-25 presented some challenges like election-related disruptions, rising vehicle costs, higher inventory levels at customers, and model mix considerations, which had a negative impact. Commercial vehicle production above 6 ton in Q1 of FY 2024-25 registered a degrowth of 3.5% at 98,007 vehicles in the corresponding quarter of the previous versus the corresponding quarter of the previous year. While EV bus sales were steadily rising in FY 2024, we observed a dip in Q1 2023 versus Q1 of financial year 2024-25. OE sales. In Q1 FY 2024-25, the commercial vehicle industry saw a significant shift in mix towards intermediate commercial vehicles, where our value per vehicle is relatively lower. Delays in infrastructure projects, cautious buying behavior, and increased MHCV inventory levels. As a result, our overall sales performance was impacted. During the quarter, the company recorded sales of rupees 430 crores compared to rupees 447 crores in the corresponding quarter of the previous year, resulting in a degrowth of 3.8%. However, we expect an improvement in sales in the upcoming quarters due to the following reasons: assumptions. Resumption of infrastructure projects and mining activities. Strategic focus on new projects. New products such as the lift axle control system positions us well for improved sales performance in the coming quarter. Increased penetration of EV electric vehicle aggregates such as e-compressor and electronic braking system aligns with the market trends and customer preferences. Anticipating potential government mandates relating to advanced driver assistance systems, including features like advanced emergency braking and lane departure warning, we are proactively collaborating with original equipment manufacturers. Now coming to aftermarket. Moving on to the aftermarket, the performance in Q1 FY 2024-25 improved to rupees 126 crores, a growth of 4.1% over a corresponding period in the previous financial year. The key growth drivers include increased sale of door control systems by engaging with ARAI approved bus body builders. OE spares. OE spare segment growing at 46% due to increased consumption of BS6 and electric vehicle products, particularly e-compressor kits and filters. Future growth in next quarters in the aftermarket will be driven by increasing penetration of the door control system business, providing advanced driver assistance systems and driver behavior monitoring systems to a leading corporate customer for their employee transportation bus fleet.
Ladies and gentlemen, we have the management line disconnected. Please wait while we reconnect them. Ladies and gentlemen, we have the management back with us. Over to you, sir. We have the management line back with us. Over to you.
Hello?
Yes, sir.
What will be our growth this year in terms of exports and domestic? If you could just give me a number.
Yeah. So see, our larger, I would say it's more like a guidance. We try to outperform the market. Market itself this year, we expect in the calendar year from January to December, we expect market to degrow about 3% versus the previous year. The market, but if you take a financial year,
okay.
Because this year Jan, February, March was not a good quarter. Next year Jan, February, March we expect it to be better. Overall, it could be zero, flat, or some marginal plus. That is how we look at the market. And the market, our forecast has not changed much, even though there has been a marginal degrowth in this quarter, which is largely driven by the budget, the election-related disruptions. But which anyway we have factored in our plan. We expect the market to recover going forward, but still at the full year level we will be minus 3% because in the first half of the year we are almost minus 7% this year. The recovery is not completely offset, but partially offset for the calendar year.
Okay.
Now coming to our sales, again said, we expect to outgrow the market at least about 10%. That has been our internal target. Last quarter we could not do because the mix also became unfavorable because the number was very close to typically the 30,000 vehicles. The mix was not favorable because it was more of buses, more of light intermediate commercial vehicles type of segment, where the content is low. But we now believe the market will be back with its normal mix, which will plus we are also launching some new products. Already we have started selling some lift axle control systems. Also, electronic control for air suspension, some of the buses to one of the bus customers. These are all very high content products. So with all that plus, already I have been always highlighting some of the new products that we are launching, mostly in the electronic stability control or EV electric compressor or electronic braking system such products. With those things, we are planning to outperform the market by about 10%. Probably this can be taken as a guidance. And barring any unforeseen thing which will have a negative impact on the mix, we should be delivering our numbers.
Right. So if I get it right, your 10% internal target of outperformance will be majorly due to your increase in content per vehicle, right?
Absolutely, yeah.
Okay. I got it. Thank you, sir. All done. That's all from us.
Thank you.
Thank you. We have our next question from the line of Nirali Gopani from Unique PMS. Please go ahead.
Yeah, hi. Thank you for the opportunity. So as you had mentioned that when we export it mainly to our parent and only BMW is an exception. So are we talking to more such customers or anything on the passenger vehicle side that we are working on? Can we see growth in the next 2-3 years on that side?
Yeah. So the supply to BMW is largely for the fast car segment, because we have a product which is originally from the NAPCO portfolio, which is electronic control for the air suspension. This is purely a passenger car business, and that's a growing business from our export portfolio, because also this product is a very proven global product, and we have been continuously growing last 2 years and all that, but temporarily we are seeing some degrowth to tune of about 12%. Also partially because stock correction and all those things happening on the customer side also. But otherwise, most of our products, it's a compressor actuator type of product. This product, we more or less same configuration or the variations are different, but as such a compressor is needed for all those customers who use air brakes. This is the basic system in any compressor, any commercial vehicle. So we started with one customer, then extend another customer, now going to a third customer. So because with the scale advantage, we are also able to make ourselves more competitive also. With that, we keep expanding our position and globally we are gaining market share. Of course, our parent is gaining market share using the products that are produced in India. So that's the way we work. So fast car and product line, this is roughly about 25% of our business from our export. Then 75% goes to commercial vehicle segment. All these products are per se very proven global products, required for most commercial vehicles. Based on the India price, our product lines are a parent organization secures new businesses with all customers. So we become a manufacturing site for that. That's the way the business model is.
Right. So, but sir, can we see new customer on the passenger vehicle side also? Is there any clarity from our global parent?
No, the same. Anybody who has the BMW, base. For example, VinFast also they launched a product. If the volume increases, we'll be able to supply. There are some Chinese customers who are actually using the BMW maybe license or whatever. So those customers are buying. But majority of our sales goes directly to BMW.
Okay. Fair enough. And so just one more question that if I'm right, the global our parent also has appointed some directors whose focus is only on India. So globally, do we see any change in expectations from India, ZF India, any change in the growth numbers that we can see? Anything that you can highlight on that side?
Can you say it again? I couldn't get the question.
Our parent company has recently appointed a director whose focus is solely on India.
Yeah.
So, is there any change in the expectations from India? Can we see further accelerated growth or maybe new products from the ZF basket? Anything on that side that you can highlight?
Yeah. So, ZF, one of the board member is responsible for India, which was a new arrangement in the last 2 years. Of course, the purpose or the idea is to focus on India and grow the ZF business in India. Also, if you see even the board India, there are TCS Limited, structure itself, we made some changes. The chairmanship has been taken by the ZF nominee, ZF executive. So, though it is a non-executive independent director, non-independent director. But then the reason, one way we will be able to benefit it is the parent will know better the need to leverage the listed company and the footprint that we have created, etc. So, but then immediately I'm not in a position to tell you if it's immediately adding to some new business or anything, but directionally we are moving in a direction to see how India can be leveraged, how the CVCS limited footprint can be leveraged. Again, depends on what value we are able to add in terms of better costs. Those aspects. I expect in this direction we should be able to see some improvement in our sales, even largely from an export perspective, but we have to wait and see.
No, great to know that, sir. Thanks a lot for the opportunity.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Yeah, thank you. Thank you very much. Of course, it's always a pleasure for us to really take your questions and answers. Thank you. Thank you very much.
Thank you. On behalf of Batliwala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.